it's about time, and that's usually the way it happens. Gold leads the way, silver then catches up on a percentage basis and typically outperforms it. But to me, one of the things that really needs to be talked about is that over 1,200 tons of silver that have stood for delivery this year. You put that on top of the 76 million ounces that India took possession of in February, popping their numbers up to, I think, over 400 million ounces in the last 2 years, which coincides pretty darn close with the amount of silver that's been bled off of COMEX. All of these things are starting to come together, but at the same time, we see the silver market in Shanghai really damn close to 28 bucks an ounce. So what is the real price? Is it the make-believe price on the LBMA and on the COMEX, or is it the ever slightly increasing arbitrage-friendly price that we see in Shanghai of nearly $28 an ounce? So it's this is one of these deals where, again, you look at silver, I do anyway, and look at it from a fundamental position. Chris, at 26 bucks just seems ridiculously cheap when you look at it from an inflation-adjusted position, when you look at it in terms of its supply-demand fundamentals, when you look at it in just about every single metric, an asset that is decreasing in nature, that is increasing in demand on many different levels. I think it's hard to ignore it. And then when you see, even on the LBMA, they're down to 814 million ounces. That's the lowest it's ever been, and of which 60 to 70% of it belongs to the ETFs or the Bank of England. So the majority of everything that they have for delivery on the LBMA is either already owned or encumbered, or we're down to the scraps. So this is becoming very interesting. And as China continues to crank up the arbitrage heat, this will be something that I want to talk about here in a moment or two as we get deeper into this conversation, what's going on with the pricing and the demand.
In this insightful analysis by Andy Schectman, we uncover compelling data supporting the bullish case for precious metals, particularly silver. With over 1,200 tons of silver standing for delivery this year, and India's acquisition of 76 million ounces in February alone, demand is surging. Despite stagnant prices on platforms like COMEX, Shanghai's market reflects a truer value nearing $28 an ounce. Schectman emphasizes the discrepancy between current prices and fundamental indicators, highlighting silver's potential for significant appreciation. With gold priced at $2,160, a historical ratio suggests silver should be around $51.40 or even $307 based on geological abundance. As silver gains momentum, it's clear that its undervaluation presents a prime opportunity for investors.
But yeah, I think to me, I don't care if the commercial banks are lining up on the short side right now, if that's what you're getting at. The bottom line to me is that to be short this market, especially naked short silver, in an environment where you have massive bleed downs in inventory, where you have arbitrage going on across the globe, where you have countries like India standing for huge amounts of delivery, taking possession of it, it's as dangerous and stupid as a mud wall. So it's just a matter of time before silver finally accentuates itself and finally gets to a price that would resemble something that is fair. And I think we're still a long ways away from it. So yeah, it's nice to see it gain some strength, but even with that being said, I think we're well below where it should be. Look, just take the price right now of gold at 2,160 bucks and divide it by 42, which would be the average price of the last 150 years. The price relationship, that's $51.40. That's where it should be today based upon the last 150 years worth of price ratio. But it's coming out of the ground at 7-1. So take 2,150 and divide it by 7, you get $307. If you told me it was 300 bucks tomorrow morning, I wouldn't be surprised, and nor would I think that that's outrageous based upon its geologic relationship with gold. So yeah, I mean, 50 bucks wouldn't be too expensive, nor would 300 or anything in between. So as we see it move up little by little by little, yeah, it's long overdue. And I think there's a lot of road left to who expect silver to outperform and to appreciate as time goes on, as we get closer to the elections, get closer to the BRICS meetings. I expect to see more of this continue.
In this follow-up, Andy Schectman discusses the BRICS countries' strategic moves in commodities, challenging Western pricing mechanisms. Highlighting China's control over the London Metals Exchange and the emergence of a BRICS grain exchange, Schectman predicts a shift towards exchanges like Shanghai Gold Exchange. He notes the trend of countries like Brazil accepting yuan and potentially converting it into gold, signaling a significant transformation in global finance.
It's annoying as hell, and it's old already, and it's the rinse, wash, and repeat. And this is one of the reasons why what I'm about to mention, with the related to the BRICS new currency, it will end very poorly, and I can all but guarantee that. In a world of no guarantees, to me, it's almost a no-brainer when I read to you what I'm about to read to you. But I think that this is not lost on the rest of the world. And look, there's a reason why the Chinese bought the LME, the London Metals Exchange, which was primarily base metals like copper, as you mentioned, and others. And if you look at the fact that China just canceled a bunch of I think they were soybean or corn contracts with U.S. farmers. Why? They're buying them from Brazil now and paying for it in yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. At the same time, the BRICS now have just developed or are going to develop a BRICS grain exchange. And the BRICS grain exchange is a pushback to the fact that all of the global prices of these commodities are primarily settled on the Chicago Mercantile or the Commodity Exchange. And when you listen to what they're saying, they say the ministry insists that the BRICS countries are the largest grain producers and exporters, but have no leverage to influence the price of agricultural commodities critical for their food security. So what are they doing? They're building the BRICS grain exchange. So this is similar to what I'm about to bring up to you with what's going on with precious metals. But when you look at what they're doing, look, they bought the LME. They're going to warehouse metals that are listed on the LME in China. They're the biggest producers of half of the industrial metals and the rare earth metals and all of the precious metals, and they produce as much grain or more so than the West. These are the countries that are the ones producing and accumulating and appreciating the commodities for what they represent. And they have been subservient, really, to the Western price mechanism and the whims of the ups and the downs and the shorting and the sucking and the speculating and then smashing it down again, like we're seeing right here with the increase in the swap dealers' short position. It's annoying already. But if you take a step back and look at it for what it really is, I think there's a hell of an opportunity here. And let me just jump ahead. I know this isn't what you asked me, but because it fits like a hand in glove, and it's really very important.
I know you had a big scoop today, so
well, to me, it's one of the most important things that I could mention, and a lot of it I've been talking about, right? I've been saying for a long time that the Shanghai Gold Exchange or the Moscow Metals Exchange or the Exchange for Metals in Dubai at some point would take over for the fraudulent LBMA and the fraudulent COMEX, where exactly these kinds of things can happen. Where the price is controlled and or really representative of the futures price rather than the underlying commodity. It's the tail wagging the dog. So, there's been this talk about a new currency, and we talked about it for the last few years. And a lot of people were bummed out when they didn't come out with their currency in August in Johannesburg. And we've talked at length about how instead they've been trading in local currencies, just like Brazil paying or accepting yuan for their corn. Brazil is, after all, the second largest exporter of corn in the world, or producer of it. And so now they take yuan, and if they want to hold it, great, or maybe they convert it into gold on the Shanghai Gold Exchange and take possession of it, because gold is tier one, and gold has been accumulated by the central banks at a faster pace than ever. All of these things are coming together. We see that.
In today's discussion, Andy Schectman provided invaluable insights into the dynamics of the precious metals market and the evolving global financial landscape. From silver's potential surge driven by increasing demand to the strategic maneuvers of BRICS countries in commodities trading, we've explored crucial factors shaping the future of finance. If you found this analysis informative, don't forget to subscribe to our channel for more updates and analysis. Remember to hit the like button if you enjoyed the content, and feel free to share your thoughts in the comments section below.